Welcome back to Portfolio, everyone. And today we're going over the dividend-paying tech stocks you can buy right now. Of course, in the tech sector, not many companies do pay out a dividend. These type of tech companies need all the money to stay back in the business, reinvested in order to grow operations. But people who are dividend investors only invest in companies who do pay out dividends and they want exposure into the tech sector. They need to find tech stocks that do pay out cash flow to investors. So what we're going to take a look at today is 9 dividend-paying tech stocks that you can add to your portfolio right now if you're interested in getting into the high-growth tech sector and you want that dividend income coming in. So of course, the tech sector has seen insane growth over the past year. On the 1-year chart for a tech sector ETF, you can see the tech sector overall is up 35%. They of course saw March lows, but this tech sector has rallied and it's reached new all-time highs. And this is Vanguard's Tech Sector ETF, VGT, which gives an overall indication of how the tech sector has performed. So if you want to break down into the tech sector and you want to own some dividend-paying companies, we're going to go over 9 options you have to take a look at today. But before we do that, everyone, as you know, I'm the Gen Z investor, and every single day on this channel, I talk about different stocks you can buy, overall stock market performance, and any other big stock market news and headlines. So please like and subscribe for those daily videos, and we're going to jump right into the first dividend-paying tech stock you can take a look at right now. The first one on the list is Oracle, currently trading just shy of $56 a share. On the 5-year chart, they were up 39%, so nice long-term share price appreciation. If we take a look at how big the dividend they pay, currently yield 1.73%, so nothing too minimal, with a very safe, very sustainable 24% payout ratio. So they're only paying out 24% of their earnings per share, leaving a lot of money left within the business to grow and improve operations. And of course, that leaves a lot of room for that dividend to grow for years to come. And they have a 5-year annual dividend growth rate of 13.65%, just showing that they can increase that dividend at a very fast rate year over year with a 9-year dividend growth history. And of course, you have to take a look at how safe that dividend is, but with that very low sustainable dividend payout ratio, you can see they actually have the highest dividend safety rating possible of 99, which is ranked very safe. This company is almost impossible and very unlikely that they cut that dividend anytime soon. So Oracle is the first tech sector stock that you can take a look at right now that does pay out a dividend. Moving on to the second dividend-paying tech stock today is one of the most popular stocks in the world, Microsoft. And of course, Microsoft has seen huge surge as of late, up 5.62% on the day, currently trading around $216 a share. 1-year chart, they're up 50%. And Microsoft has been in the news a lot lately because they're actually working on a deal to acquire TikTok and TikTok's US operations, of course, to take it away out of Chinese ownership and bring that ownership back to a United States company. And this is big news for the company because TikTok is the fastest growing social media app on the market right now. And if Microsoft can acquire that US operations, TikTok in the US currently has over 100 million users, which will see Microsoft some nice revenue growth sometime in the future. So a lot of news, and Microsoft is working on getting a deal done right now with TikTok. Very interesting to see what's going to happen with that. So of course, Microsoft does pay out a 1% dividend yield right now with a very safe 32% payout ratio, and they've been growing their dividend at over 10% per year on the past 5 years with a 16-year dividend growth streak. Very nice to see. And they have the highest dividend safety rating once again at 99. So another stock where if you want to get into the tech sector and you want that dividend income, very unlikely, almost impossible that this dividend gets cut anytime soon, and they will continue to grow the dividend, I'm sure, for long into the future. Moving on to the third stock on our list is Intel, ticker symbol INTC, currently at $48 a share. We take a look at the 1-year chart, they are down 6%, and they saw a huge sell-off over the past couple of weeks. If we move over to the longer term perspective, you can see they're up 65%. Intel is a massive company with a $200 billion market cap, currently trading at 2.77% dividend yield right now, with a sustainable payout ratio of only 27.3%. So once again, so far the first 3 tech sector stocks on this list have very low sustainable payout ratios, meaning this company can continue to pay out the dividend and grow it year in and year out, as well as keep a lot of money within the business to grow operations. And they've been growing their dividend at a rate of 7% annually over the past 5 years with a 6-year dividend growth streak. With regard to dividend safety, a very safe dividend once again, ranked at 96 from Simply Safe Dividends. So far, first 3 stocks on this list all operate within the tech sector but provide different services within that sector and all pay nice, very safe dividends that are going to continue to grow into the future. Moving over to stock number 4, it is Cisco, currently around $47 a share. This has seen a little bit of red on the 1-year chart, down close to 15%. Move over to a longer term view, up 65% over the past 5 years. And their dividend currently yields around 3%, so one of a higher yielding tech stocks you can see right now, with a sustainable payout ratio still below 50% at around 45-46% payout ratio, and they've been doing a beautiful job of growing that dividend on average of 13% over the past 5 years, with a 9-year dividend growth streak. Moving on, they have a very safe dividend once again with a safety score of 91, so another company, if you're looking for that consistent tech dividend income, very unlikely that they cut their dividend anytime soon. Tech stock number 5 is a company favorite, and a personal favorite of mine, of course, is Apple, ticker symbol AAPL, around $435 a share, up 100% on the 1-year chart. And within the past month, they've seen a nice rally over the past couple of days, and this company has only continued to grow. They're actually the largest company in the world right now with a $1.82 trillion market cap, which is absolutely incredible. With regard to that insane market cap, you can see they do yield out a 0.77% dividend yield with a payout ratio of only 25-26%. So once again, same story with these first 5 stocks, very low, very sustainable payout ratio, and growing their dividend at over 10% per year over the past 7 years of dividend growth. Their dividend safety score, of course, is the highest possible at 99. Very unlikely that this stock cuts their dividend anytime soon. Number 6 on our list is Texas Instruments, around $130 a share and somewhat flat on the 1-year chart. A lot of price volatility with the stock. You see a lot of ups and downs, 2% growth on the 1-year chart. Little longer term view, they see beautiful share price appreciation over the past 5 years, up 155%. Market cap at around $116 billion, another mega cap company, with their dividend around 2.8% right now. Nice dividend yield. This is not a below 1% or 1% dividend yield. If you buy into TXN, you're actually getting a nice chunk of dividend each and every year at around 2.8%. With a payout ratio around 70%, which is a little bit on the high side, but still under that 75% threshold I usually recommend for dividend paying companies. So a little bit higher compared to the first couple tech stocks, but you're getting a higher yield, and they are actually growing that dividend at a much higher rate of the other companies, close to a 21% 5-year annual dividend growth rate and a 14-year dividend growth streak. So they've been growing that dividend for over 14 consecutive years, and they've been doing it at a very fast rate of close to 21% average over the past 5 years, and they still have a very safe dividend. So of course their payout ratio is somewhat high right now, but they operate within the semiconductor, the subsector of the information technology sector, and they do have a 90 dividend safety ranking. So once again, very unlikely that that dividend gets cut anytime soon. The next stock on our list that we're going to take a look at is Corning Incorporated, ticker symbol GLW, currently around $30 a share. 1-year price chart very flat, so you can see they saw the March lows, but have fully recovered back to exactly where they were pre-pandemic level. So very flat on the 1-year chart. 5-year chart, again, beautiful share price appreciation, up 65% on the 5-year chart. With regard to their dividend, they are yielding around 2.84% currently, with a sustainable payout ratio at 74%. So this is a payout ratio that is still currently sustainable, but is on the high side. So of course I like to set my threshold for payout ratios at 75%. So they are borderline right now. They've been growing that dividend around 15% annually over the past 5 years with a 9-year dividend growth streak. This is actually the first company on this list that is not ranked very safe. The first 6 companies on this list had a very safe dividend with a ranking over 90. This is the first company to be ranked just safe at a 77 dividend safety score. So once again, this is another company that is unlikely that they cut their dividend anytime soon, but I just want to make it very clear this is not ranked very safe and is a little bit, second tier compared to the first 6 options we talked about earlier. The next stock, number 8 on the list today, is HP, ticker symbol HPQ, around $17 a share. They've been hit hard by the pandemic, 1-year chart down 16%, and you can see here they are a little bit different than the other tech stocks who fully recovered back to pre-pandemic levels. HP has not done that yet, still down 16%. And on the 5-year chart, they are down 42%, so not a lot of share price appreciation. The share price has been hit pretty hard over the past couple of years and are actually in the red over the past 5 years. This is one of the smaller companies and smaller tech companies on this list. You can see here with a market cap of only $25 billion, so still a big company, but nothing compared to the other tech giants that we talked about earlier. With regard to their dividend, the highest yielding so far on this list with a close to 4% dividend yield and a payout ratio of only 33%. So still a sustainable payout ratio. They are yielding 4%, which is nice and high for a tech sector stock. And of course, they have been growing that dividend at a beautiful over 18% average over the past 5 years. So the share price has been on somewhat of a decline, but their dividend is yielding very high right now. Very sustainable payout ratio, and they've been growing that dividend rapidly over the past 10 years. Moving on, you can see they are ranked safe again. So not very safe, but their dividend is not at risk right now with a dividend safety score of 74. Very unlikely that that dividend gets cut anytime soon. Moving on to the 9th and final tech stock that pays a dividend that you can take a look at right now. It is, of course, the high-yielding IBM. So IBM is in the news a lot because they've seen declining revenues and declining growth over the past couple of years, and the company is not doing very strongly. But they have new management, new CEO, and they're actually changing operations, and the whole company is looking to change and go back to the growth stock that it once was. 1-year chart is down 17%. 5-year chart is down 24%, and you have to look all the way down to the 10-year chart, and they are still down 4% over the past 10 years, which is atypical of a tech stock. With the tech boom that we've been seeing, usually you see these 10-year charts with a long, strong upward trend, but of course, IBM is the opposite with a lot of share price depreciation right now. So this is the one that I'd be a little weary of, and that's why I threw it at the very end. They actually have a market cap still over 100 billion, but if we take a look, they are a high-yielding stock, around 5.3% dividend, but make sure you don't chase yield when investing in stocks. You want to make sure you get a total return, so a combination of share price appreciation, where share price goes up, and dividend income. Don't focus solely on dividend income, because if you do, for a company like IBM, where you see their share price has been a continuous long-term downtrend, you may overall have diminished returns because of the share decline in price. Payout ratio is still below 60%, so still sustainable, and they've been growing that dividend at over 8% per year over the past 5 years, so still a nice dividend growth rate. With a 21-year dividend growth streak, they actually continued to grow their dividend during the internet bubble that did pop back early in the year, and it's very interesting to see if this company can continue to grow, and if their new management will turn the company around. The final thing, of course, is the dividend safety rating, and this has the lowest dividend safety rating out of all the companies we evaluated today at 65, and that is why I threw it at the end of this video. I want to make sure that this one is not included with the big solid companies, and that's why I threw it at the very end. But of course, I did have to mention it because it is high yielding at around 5.3%, and it is a tech stock. So if you want a high yield tech stock and you're willing to take a gamble, or you believe IBM is going to turn things around, IBM yielding around 5.2, 5.3% right now may be the one for you. So that's how we're going to wrap up this video, everyone. We know that tech stocks are on a huge rally. They continue to grow and they continue to boost up the market. The large names are taking over the world and continue to dominate overall. So thank you for tuning in. Those were the tech stocks you could buy right now that do pay out a dividend. So if you're looking for cash flow from the tech sector, take a look at these 9 stocks we mentioned today. Like I said earlier, I'm the Gen Z investor and I post videos every single day about the stock market. So please like and subscribe, and I will see you in tomorrow's video.